anything that is gapping down, pre-market gainers, I think Celsius. Yes, Celsius is another one that had earnings. It's gone to 170. This is crazy. I mean, it is definitely growing. It's a very nice company. I wanted to take this. Okay. Now it is blue skies. It's at 170 over here. So let's see. This one is from here till here. Let's see what fib can we take. How do you get this? I will go to something else. This is monthly. Why am I going to the monthly? Now this gap, if I just take this gap and consider this as the new, because this was last earnings, right? So from last earnings, where can it go? It's 1272 is 206. So 167, I did the right 167.83 and then 181.25. We are over there at 170. Okay. So 170, I think. Let's see what this does. We are around this level. If it gets back below 167.83, maybe people are going to profit take, but who wants to sell this? This is outside the expected move. Okay. The expected move was 14 bucks. So this is the rule that I trade by. If there is an outsized expected move, it usually continues, especially when now this is all-time highs, right? So the easier trade, the way I trade, because IV has in the morning, right? When we open, the IV has not yet been sucked out fully, right? So you could sell if you think it doesn't go below 160. 157, it can probably test this 157, right? So you think it doesn't go to 150 anymore. You can sell 150. You can sell 150, right? Sell 150, 145, right? Put credit spread right away if you want, if you think that it doesn't go there. So selling a put spread is a very easy trade to do when you have an outside the expected move range and you think that it holds. Because outside the expected move, people can bring it down within the expected move. Okay. So it's expected move from 143 having 14 bucks, right? So it's 160. So they can try, right? Because there are people who sell options for earnings, right? Because IV is jacked up. So people try to do that. Okay. So people try to do that for earnings, right? As cash flow. They do earnings trades because IV is jacked up. They try to sell it. So those options of those kind of things, market makers can bring it back within the expected move, which would be 157, right? Test the all-time high that it had before, bring it within 160, which is going to be the expected move. People who have done the option selling are able to get out probably, and then we continue. So I would be looking for that. If there is any fade here towards this 157, selling 150 or 145, 150, 145 put credit spread would be a nice way to get. Now, mind you, we are still having CPI tomorrow. This can still do its own thing. But of course, if market is tanking, most of the stocks go along with the market. So that's one thing to note for this trade. So even if you choose to sell a put spread for this Friday, which is a high probability trade, once it tests 157.28 and goes higher, I don't think it tests 150, but you never know what CPI brings in tomorrow and how far we go down to filling the gap in SPY and going to 437. If that happens, then all bets are off, right? So that is what another thing.